Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW SYS 008 traders. The title of this video is Fibonacci Time Zones, Tips and Tricks. How one can use a Fibonacci time zone for day trading, for swing trading, for position trading, and for investment purposes. Let's get started. Today is the 6th of December 2014, and the time in London is 44 minutes past 12 p.m. In New York, 44 minutes past 7. Today is Saturday, all right? Happy Saturday to you all. Now, a lot of traders in the past I received some email from traders. The latest one I received from a TSTW trader, Adele, was asking me to record videos about the Fibonacci time zone. At that point in time, I do not want to record video about Fibonacci time zone because I do not use a lot this trading tool. But the time has come to share with traders few tips and tricks about the Fibonacci time zone. If you have been using a Fibonacci time zone, I encourage you to watch the full length of this video where I share with you some of the tips that you can apply that maybe you have not heard about them before. All right, so stay tuned. All right. So Fibonacci time zone. I will not talk about what is Fibonacci time zone. So I will refer traders to YouTube videos. So if you want to know what is Fibonacci time zone, you can check a YouTube video. The purpose of the video is to explain to traders how to use it. All right, use it for day trading, swing trading, position trading, investment purposes. How the professionals are using the Fibonacci time zone. One thing that you want to avoid, traders do not have enough time. Traders hate too much, blah, blah, blah. Traders and investors are looking for things that works. If you can give them that, they are happy. And I don't like to waste traders' time. I give to traders things that works. Okay? It may not suit your trading style, but look at it and see whether it's usable for you or not. So I'm going to go about how we can use it. I'm on the weekly chart, the dollar yen, all right? Though I'm using a currency here, currency pair, we can apply this strategy for commodity, for stocks, okay? All right, for any financial instrument. So that's it. So I'm going to pull out my Fibonacci drawing, Fibonacci time zone. I'm using a TC2000 trading software here, all right? And the Fibonacci time zone is based on the Fibonacci number 0, 1, 1, 2, 3, 5, 8, 13, 21, okay, 34, 55, 89, and so on. It's based on the Fibonacci numbers. So another thing, if you want to know about Fibonacci numbers, all right, check, videos on YouTube. 1 second, please. I will be with you in 1 minute, okay? All right. Once we pull out the Fibonacci tool, so you just click on it and let me start again. I will show you. So this is it. You see the vertical lines here. Just click on it. All right, click on it, and then click on the chart. Okay, you will see only one line like this, and then what you do, you extend the line a bit. You see, if you put them, it become one line, but you just extend it. Okay. Like this, okay? And then you will see the Fibonacci time zone. Because you look at the price, the price is on the vertical side of the chart because, the horizontal line is the time. You see, that's where we see the date, okay? You see the date is on the horizontal part of the chart, and the vertical part of the chart is the price itself. So those who understand maths and physics who understand this, but anybody can understand this. When we are drawing the chart, when the chart is printing on your screen, it's based on the time and the price itself, okay? So when the price reaches a level, you see the price right here on the vertical side, and you will see when this price level was achieved on the horizontal part of the chart, all right? But the Fibonacci time zone is about applying the Fibonacci ratios to the times instead of the price. You know that when we use the Fibonacci extension and the Fibonacci retracement, we are applying it to the price, which means we are applying it to the vertical part of the chart, the price itself. All right, Fibonacci extension, Fibonacci retracement. But we can apply Fibonacci extension, Fibonacci retracement to the time. So it's when we are talking about Fibonacci time zone, it's about Fibonacci apply, Fibonacci ratio apply to the time. All right, so this is it. Now, another thing you want to understand about the Fibonacci time zone is the purpose. What is the purpose of it? The purpose of it is to pinpoint, okay, possible reversal zone. Now, you have to understand the word that I use carefully here, possible, all right? Not a certainty, not guarantee reversal zone. So it's a tool that will help us, okay, that can give us a warning that there is a possibility that a reversal may take place at this point in time. But it doesn't mean that a reversal will definitely take place. All right. So when you are using a Fibonacci time zone, you are not using it as a science, as a math, 1 + 1 = 2. You are using it as a guide, okay, in the messy market to allow you to make decisions. Sometimes they work beautifully. All right, but I want to share with you a few tips. So apart from the theory about the Fibonacci time zone that everybody is talking about, I will tell you a few tips that you can apply to this simple tool to make it more powerful, more effective in your day trading, swing trading, and investment decision. Okay, let's get started. Okay, I'm going to start again. So pick it out. So what I'm going to do, what you need to do is to find, okay, a significant low and high, or two significant high. You can either choose two significant high or two significant low, or either a significant low and a significant high. It doesn't matter which order you choose then. So for these purposes, I'm choosing this low here because it's the first higher low. Price was in a downtrend for a long time, and the first higher low is a very, very important, okay, pivot point. So I'm choosing this, all right? Some trader may choose something else. So if you are using Fibonacci, try to go into the mind of other traders, all right? Okay, then I'm going to choose this significant higher low here. Okay, so then I'm going to pull out my Fibonacci time zone tool. All right, so here I'm using two significant low, this low and this low. Nothing can stop me to use this low and this high here. All right, so let's move on. So you know which one I'm choosing now. So here you see I'm choosing them. Then I'm choosing my Fibonacci time zone tool. By the way, we can apply, I'm on a weekly chart, we can apply Fibonacci time zone on the hourly chart. So day traders are smiling, okay, on the 2-hour charts, on the 3-hour chart, on the 30-minute chart, on the 50-minute chart, okay. By my recommendation for swing traders, use the weekly chart, monthly chart, and the higher top rate, especially the weekly chart. All right. For day traders, you can use it on the hourly chart, 2-hour chart, and daily chart, okay. So I choose this low and this low, and I just extend my Fibonacci time zone here. So you can see put here 0, 1, 1, 2. There are more lines somewhere on the far right here. All right, okay, vertical lines. Okay, you see the dotted vertical line. So 2 points I need to draw my Fibonacci time zone. So these 2 points I choose, and I have my Fibonacci time zone. So at this point in time, the Fibonacci time zone is telling me that, George, when a price arrives in this zone, there is a high chance that we may see a reversal. So I may just, okay, highlight it before the price reaches that level, okay? So what am I looking for? As the price arrives at that zone, remember what we do? We apply the trading drill and we apply the trading triangle, combining the technical and the fundamental. Price arriving in the possible reversal zone, not guarantee reversal zone. All right, it's not science, nothing magic about it. It doesn't work all the time. Okay, we are trading the price. If the music has changed, the dance must change. Okay, you understand it? Belly dancing, Indian people. Okay, so now price arrive here. Okay, we monitor the reaction of the price at the possible reversal zone. Apart from the technical analysis, we will use Google Finance and Yahoo Finance to validate. We are trading Forex. We must check Forex factory, the current economy news, and the policy that are implemented by the central bank. All right, to make a long-term decision, a long-term investment decision. You want to buy and hold, you want to sell and hold for investment purposes. There's a difference between investment, okay, and trading. Trading is about catching the fluctuation in the market. The investment is about catching a trend, okay, or a cycle. All right. So here we are. So you want to check, okay, what's going on, and if you receive a valid, beautiful signal, okay, without violating the market pattern, the rising channel, the horizontal market pattern, the declining market pattern, you are likely to, and then, okay, you make excellent decisions. You are trading the price, okay. So price arrive here, you are looking for a signal, a possible reversal. So the question you're going to ask yourself, what the price was doing before reaching the reversal point, the possible reversal point. The price was going down into retesting that reversal point. So because it was going down before, the first intention will be to look for opportunity to buy because he was going down. So he went up during this session, but then start going down into the reversal point. Okay? And then traders that are using the TSCWSY08 will look for a clear cut buy signal. You see here we have a consolidation that was taking place here, and then a breakout, and the price tried to retest it, and then boom. So the warning was given here, but a beautiful signal has happened here on the top of the consolidation session without violating the market, okay, pattern. Break a ball, retest, boom. All right? Though the reversal point that we have here. So this time, this warning is quite good. A day trader can also see that there's a consolidation taking place at reversal point. We can position ourselves looking for opportunity to buy on the lower part of the horizontal channel and look for opportunity to sell at the top until the price break out or break down below the consolidation session. So by choosing this point and this point, I have this kind of warning here. There is a possible reversal point. You can see that the price acknowledges this level. Another thing trader must use is to look for key levels. Now, I don't want the video to be too long. I may go into deeper and deeper and deeper, but I want to keep it very short. I have here drawing here, we have, you see this round bottom here. The measuring stick is this one here. The depth of this round bottom, okay? So we project it here, all right? And we can also use the half of the measurement. Traders that are following, I know what I'm talking about, which is the half of this one here, okay? It's priced there, okay? So we project it as it goes above it. The midpoint target is here. Exactly at that point in time, if I draw another horizontal line at the midpoint target, which is half of the depth of this round bottom, okay, you can see that there's a midpoint target around this possible reversal zone. So when you see using Fibonacci time zone, look out for key levels. All right, you want to buy at a valid key support level. You want to sell at a valid key resistance level. So once you see a possible reversal zone, look out for the best resistance and support level on the edge. All right, now let's remove it. So this is the way I draw it first time. Let's do it in another way. Okay, so suppose I'm a different trader now. I'm choosing this low and this low. Remember, we need 2 points to use the Fibonacci time zone. So the beginning is the first point that I choose, which is this point here. And the second point, I adjust the second line to the point. So I'm choosing this low and this high. I can do that, okay? Now, with that information, so the first one that I used was this low and this low. Oh, remember? All right? Now I choose this low and this high. Look what he's telling us. He's telling me again, same zone, almost same zone again, possible reversal zone. But at this point in time, you can see that the price was going up. Always ask the question what the price was doing before reaching the possible reversal zone. So the price was going up before reaching this possible reversal zone. So at this point in time, we will be giving priority to sell signal in this zone. And this is true. The price went down a little bit. Okay, so when you're using Fibonacci time zone, try to be a little bit creative, a little bit multi-talented, okay, see it from different angles. So this one now using this low and this high, I was able to pinpoint this reversal point when the price started going down a little bit. Using this low and this low, I was able to pinpoint possible reversal zone where we can buy because the price was going down at that point in time. So nothing should stop you to play around with the Fibonacci time zone. But you want to use significant high or significant low, or combine a significant low and another significant low, or another significant low and a significant high, or two significant high. It doesn't matter which order you select them, but it must be a significant. I would prefer today to use at least weekly chart, but we can apply this on the hourly chart or any time frame. In fact, for investment purposes, we can use weekly chart, monthly chart, even a yearly chart to use the Fibonacci, okay, a time zone. Let's see how long I've been talking to you now. I got 5 minutes for my normal time. I will have to go over my regulated, self-regulated, okay, 20 minutes time. I will have to go because there are more to say. I haven't shared all my tips with you so far. The next thing I want to share with traders, okay? This one, you have not heard about it before. All right, so you can mention my name for it, okay? All right, so when you are using the Fibonacci time zone, you see the vertical line. Another thing I want you to pay attention to, all right? Pay attention to it, all right? Is to draw the middle line of the two vertical lines. Here it is, here. So whenever you have the two lines, this is what the software is giving you. You select 2 points, that's it. That's the beginning. So that's the measuring stick, one, okay, and then 2. Okay, this the distance from here to here, is from here to here. All right. Okay, 1, 1, 2. All right. Draw the median line. All right. The median line also will reveal to you, okay, possible reversal zone. You see here? You get it now? Okay. Anytime you see two lines of the Fibonacci, just be aware of the median line between the two vertical lines, which can also pinpoint possible reversal zone. Stay in the middle. Stay in the middle. And it won't harm you. You see here? Now you see, to do it properly, okay? So you see now, you see this vertical line and this vertical line. I'm looking for the middle point of these two vertical lines to detect, okay, another possible reversal zone. It doesn't mean that the price will definitely change direction here, but sometimes it works beautifully. So this, hold on please. That's it. So my line is in the middle of these two vertical, this one and this one here. You can see that applying this strategy now, this is my vertical line now. The question that you always must ask is what the price was doing before reaching a possible reversal zone. It was going up. So as the price is approaching the orange line here, what am I looking for? I'm looking for opportunity to sell. See here? Price went up a bit and then pulled back down. Remember, when you ask the question, what the price doing before reaching a possible reversal point, the next question is, where are the key levels? So you are looking at the chart and you are looking at a valid key resistance level if you want to sell, and a valid support level if you want to buy. So you want to look at the chart. There is one here, okay? Though the vertical line is here, the resistance, the best resistance is this one here. That's where the price did change direction, using the middle point of the two vertical line of the Fibonacci time zone. Don't tell anyone that I told you this, okay? All right? Let's move on. Let's move on. I want you to understand this. I want you to test it. Don't go and just bam, bam, bam like a little child. Test it, retest it. I like traders who test it. Some traders ask me difficult questions, all right? Some traders test things, okay? I like that. Test it, okay? Apply it to yourself, okay? Use a demo account, work on it. It makes sense to you. You are excited about it. Try it a different way, but don't try it blindly, okay? Always, we want to apply the trading drill and the trading triangle without violating the market pattern, combining the technical trading and the fundamental. It makes sense? it is also powerful. Okay? Let's see, maybe I'll record 2 videos. Now, I'll let it run. I'm going to go over my 20 minutes. All right? It makes sense? All right. Okay, let's remove my drawing again, and I'm going to choose another point, a different point completely this time. So we have chosen the low and this high, and we have chosen this low and this lower low. All right? Let's play it a little bit differently now, using a Fibonacci time zone. All right? So this time, we see that now the price, there was a consolidation here, and the price went up and displayed this low. So I want to count, so I can use my Fibonacci tool as a momentum tool, which means I want to concentrate on what is happening now. All right? So instead of going too far, because I was a bit far away from where the price is, now I want to concentrate. So I'm choosing 1 point here because there was a consolidation. All right? So I just want to choose this low here. Okay, I'll put my line there first. So the lower part of the horizontal channel, and I'm going to choose this low here. So the price start going up from here, boom, 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 up, and change the direction here, and pull by display this low. So I'm choosing this low and this low. Now what I'm doing here, I'm using the Fibonacci, okay, a time zone as a momentum because I want to concentrate on what is happening now, urgently. All right? So here it is. So by doing that now, I have a line here, and this vertical line here is telling me that, okay, George, talking about it, using the Fibonacci time zone as a momentum tool, okay, watch out if the price arrives in this zone. Now, the next question is that we should ask, what the price doing before approaching this zone? It was going up. So we will be giving priority to sell signal, yes or no? Okay, all right. Now, next thing, which key level should we watch? All right. By using my, again, you see this is what we call multi-talented trading. We have this measuring stick here. So price goes above it, okay, here, all right. So our target right here, we are above it. Price goes above it, so we are now uncharted. You can see the end of my projection, all right. So that will be the level that we must watch. So if I use my midpoint measuring tool, put it above it, it's here. You see now? So we want to use the Fibonacci time zone around key levels, all right, by combining the technical trading and the fundamental analysis. So there is a key level here, but the price above it. The next key level is somewhere up here, using the depth of this round bottom here. My measure stick is here. I use a conservative measurement. Okay? All right? So as the price is approaching this level, we want to ask where are the key levels, and we're using our measuring stick, we can dictate the key level that we need to watch. Now, we will not base our decision on technical alone. If you are an investor, we want to check the current market environment, what's happening with the dollar yen, what is the policy of the Japanese central bank and the Federal Reserve in the United States. Okay, and do a bit of due diligence at Forex Factory, the economy news, the data that were released, what's happening here, the market sentiment, the market environment. We can apply this strategy also for stocks. Again, nothing should stop me to also put, remember what I said to you, the tips, the median line of my 2 vertical lines. Now, at this point in time, we are almost there. Does it mean that the price cannot continue to go up? It can go above it. But sometimes the price will reach the reversal point and will not reverse. All right? This is what I'm saying to you, that we should not use the Fibonacci time zone, okay, like a magic one. It makes sense? So we can use the Fibonacci time zone as a momentum tool if we are concentrating on the short term, okay, up to the medium term to see what is happening now, this moment now. okay, selecting a significant low, significant high, significant, okay, low and high, too significant high, too significant low, and to pinpoint possible reversal zone. I'm going to adjust my line again. This time, using the Fibonacci time zone as a momentum, I'm selecting this time. Pay attention carefully to what I'm doing here. I will zoom into it, don't worry. Okay, so maybe you have been banging the table. Let's say, George, can you zoom into it, please? Yes, yes, yes. Here we are, my friend. Here we are, my friend. Okay, so now, it's a little bit bright in London today. That's why I'm a bit excited. So if you have sunshine in your country every day, in London, when we see the sunshine, we are a bit excited. So I'm a bit excited, okay? All right? So I'm using this point, this lower part of the horizontal channel, and this is significant high, talking about the momentum. Look what it's telling me. You see the first one that you see, we are again almost in the same zone. Possible reversal in the short term. All right? Okay, you see now, but do not forget also the middle vertical line between the two vertical time zones. So when we are using a Fibonacci time zone, we are applying the Fibonacci ratio to the time, not to the price. This is a more advanced way. There is another way that traders use the Fibonacci. We use also Fibonacci arc. The Fibonacci arcs apply the Fibonacci ratio both to the price and the time, which is beautiful and powerful. Both to the price and the time. You remember the ordinary way of using Fibonacci retracement is to apply it to the price. Fibonacci retracement, Fibonacci extension, we apply it to the price itself. Okay, price goes up from A to B. We want to know Fibonacci extension or Fibonacci retracement. You remember? Now, what we are doing here, we are applying the Fibonacci ratio to the time, the horizontal part of the chart. But the Fibonacci arc combine both. He apply it to the price and the time at the same time. At the end of the day, the bread and butter for consistent winning trade or consistent profitable investment, okay, is to follow the market patterns. There are more to Fibonacci time zones, tips and tricks. I will be recording another video where I will share with you, okay? I will give another name to it to draw your attention, because if we do part 2, sometimes traders think that it's just a continuation, but sometimes I share things differently, okay? For one more time, let's apply it again, okay? You see here, this low here, price was going down, so price must do something first. Boom, 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 down. And then for one reason, the bearish momentum has stopped in this zone. So this is a significant low, okay? Again, here it's going, you see, going up, bam, 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 okay? And then suddenly it stopped. So this is also a significant high. This is how you want to interpret this. So I choose the first point. Then I put the second one here. Okay, hold on, please. I did it the opposite way. Okay, hold on, please. That's it. Yeah, they are beautiful. So by using this low and this significant high on the weekly chart for the dollar yen, you can see that at this point in time, it's telling me that, Joel, watch out, possible reversal here. It didn't happen. This one didn't happen. Okay? But pay attention, okay? Pay attention carefully, okay? Let's draw the middle line of these two. Always, don't pay attention to the first one. Don't worry about the middle vertical line for the first session. Start from the second one, third one, fourth one, and so on, okay? All right? So, this one, suppose we draw a middle vertical line, okay? If you can see, sometimes you will notice, sometimes you will see something like this, when the Fibonacci time zone, the possible reversal zone, is not activated, which means a reversal did not take place. But very often, what you will notice is that a reversal has already taken place at the middle vertical line. So you see, price was going down as it reached the middle vertical line. Are you with me? Wow. Okay, hold on, please. I hope I can zoom. Okay. Sometimes I don't want to mess up my chart. Okay. So I'm a little bit careful. So can you see now? Sometimes because the reversal did not take place here, is because the reversal has already taken place at the midpoint of the two vertical lines. So be aware of that. Sometimes the reversal will take place before, okay, the possible reversal zone, or sometimes it will take place after. As I show you, the consolidation setting, we see the reverse act, the possible reversal point, and then we have a long consolidation before the breakout. Okay, so here you can see at the mid vertical point, okay, the price did change direction, and so it was going down fast, and it reached the midpoint, it went up a bit. Okay, all right. So using this significant low and this significant high, we have our Fibonacci time zone. This is about applying Fibonacci ratio to the time, all right, on the weekly chart, okay? So it said possible reversal here did not happen. Here, this one is beautiful. Okay, the question that we ask all the time, when the price, what the price doing before reaching the possible reversal zone? Was he going up? Was he going down? Was going down, okay, at this point in time, okay? Do we have a significant support or resistance there? Yes, we do. Okay, here, this one, this is significant low, isn't it? If I come to the same zone, okay, nice, isn't it? Nice, was going down. This is a beautiful support. Some people will take profits, all right? Now we will use our trading triangle, Google Finance, okay, do our due diligence, and then take it from there. Check the market environment, the market sentiment, all right? Sometimes we can use a different strategy, which means we acknowledge the possible reversal zone. So price going down, okay, price going down reaches the possible reversal zone. If no reversal did not happen, what is it telling us? It's telling us that continuation. Yes or no? It's telling us possible continuation. So here, as the price comes here, it did not change direction. We may say, okay, possible continuation. So you want to interpret it in both ways, possible reversal or possible continuation. So here you can see that the price just ignored it, okay? So there was here this one. This was nice, it changed direction, okay? Remember also, as we pass this point, we can draw the middle vertical line. This is the tips that I want you to remember. That's why I'm saying it all the time, because you will see it anywhere else. Roughly, okay. If you are not sure, just use just do like this, okay, and then compare the two distance to see whether it's truly the midpoint. It's not exactly somewhere. Roughly, it's a zone. All right. You get a message. It's a zone. Okay. One more. Okay, it's a zone. Okay. All right, it's a zone. Okay. Possible reversal zone. All right, so the median, you can see here again, price was going down and then changed direction here, display a higher low and went up. Okay, remember the median line, and again we'll move this one between the two vertical line. Always watch out. When you come there, watch out. Okay, here the price you see down only to quickly come back down. It's a bit messy here. Okay, so be aware of. The median line, the middle vertical line between the two time zones. Always see what's happening here, okay? All right, and use the market pattern, okay? Consolidation, to come back in, and then continue to go down. All right, and this one here, again, all right, possible reversal zone, prior consolidation again, breakout, retest, boom again. All right, so sometimes the possible reversal zone will give us the warning. Remember, these are warning tools. It's what we call an indirect signal. The price will give the direct signal. You can just acknowledge it and wait for, okay, confirmation, either higher lows or lower high or something like that, where the price will give you the best entry point on the edge with, okay, trend line. You draw your trend line. Okay, you are using Fibonacci. Don't forget to draw your trend line. Breakable, retest, still apply. Okay, trend line, breakable, retest, blah, blah, and so on, and so on, and so on. Combining the technical trading and the fundamental channels, okay, trend line on the edge, considering the risk-reward ratio. One can also combine the Fibonacci time zone with the 13 specific slow stochastic patterns. Okay, so this is it, and do not forget the median line. So sometimes, as you can see here, It's telling us that possible reversal zone, but reversal did not take place until we reach this point here. All right? Break above the trend line, the blue trend line, and retest it, and before it went up. Again, we just keep drawing the trend line, okay, on the time frame that we are on, and we just focusing on the price. We acknowledge the warning, and we are patient. Yeah, there was a warning, and we are patient. But you can see that after this warning, the next warning is far away here. Using this significant low and this significant high, this tool has done an excellent job. But at the end of the day, as a trader or as an investor, I am the one making decisions. Suppose I'm ready to buy, okay? I'm an investor, I'm ready to buy. I can use Fibonacci time zone to help me decide when is the best place to buy. All right, I've done my due diligence. I'm happy. I'm just waiting to buy. Okay, I can use Fibonacci, okay, time zone to help me to decide when to come into the market and also at the best price. Checking the fundamentals. I want to buy something. I want to buy it at the lowest price. Be very, very, okay, serious about that. Okay, at the lowest price. You want to sell it very, very high. Key support, key resistance level on the edge, analyzing the risk-reward ratio. Ladies and gentlemen, I'm going to record the second part of this video, and I will be calling it a different name, all right? Call it different name. I will not call it part 2, and I will share more tips about the Fibonacci time zone. This is about Fibonacci time zone. In this video, we were talking about how to apply the Fibonacci time zone for day trading, swing trading, okay, position trading, and investment purposes. The Fibonacci time zone apply the Fibonacci ratio to the time. The normal Fibonacci retracement or extension were applied to, okay, the price self, but when we apply in Fibonacci time zone, we are applying it to the time to dictate or to pinpoint possible reversal zone. A possible reversal zone is not a guarantee reversal zone. We must, okay, identify a key support if you want to buy, a key resistance level where the price is likely to find a support or resistance level. We must also check, okay, the fundamentals, the market environment, okay, the market sentiment to validate the technical setup. For trading purposes, we must always use a top-down trading method, applying the trading drill, a setup, a signal, and a low-risk entry point. For investment purposes, we are checking the fundamentals, the current Federal Reserve decision, talking about currencies, okay, performing Google Asset test for stock, checking the balance sheet, the cash flow, the competition, all right. Once we are satisfied, we can use the Fibonacci time zone, okay, to help us decide when we should come in the market at the best price. Another tips that I share with traders in this video is that when one is using Fibonacci time zone, one can also highlight the vertical line between the two Fibonacci time zone. These are zones, these are not a thin line. Sometimes a Fibonacci time zone can give a warning, okay, ahead of the reversal. As you can see, the reversal does not always take place at the point where we have the Fibonacci time zone. Trader must be aware of it. If there is no reversal, there's likely to be a continuation. Traders and investors must always pay attention to the market patterns, the rising channel, the declining channel, and the horizontal channel. I hope you have learned something from this video also, and will put into use, okay, to make excellent decisions. Until the next time, enjoy yourself and be very happy. We are the TSTW SYS 008 traders. Speak to you soon.